Hey there traders, welcome back for another free video. This is Jeff from thestockbandit.com. Thanks for joining me. So last week was a really interesting week in the markets. Obviously, all eyes are on new highs, and for 3 of the 4 indices, we got them once again. So the NASDAQ has been the index that's been lagging the others. This has been the one that's kind of been really weighed down a lot by Apple. And just a kind of a quick look at Apple, you can see just what a heavyweight this stock has been, and obviously it's really been struggling. So the Nasdaq has been holding up pretty well, but it's not been able to achieve a breakout like the other indices, and it still has yet to do that. But last week we saw something very positive take place. Not only have we been seeing kind of this rising trend line here showing real shallow dips here in recent weeks, but this lateral resistance was tested midweek on Wednesday. That's 31.61, and then we finally broke through it nicely to close at 31.79 on Friday. Now volume on Friday, it was above average. That's where this yellow or this gold line is. That's a 21-day moving average of volume. That's not 21 calendar days, that's 21 trading days. So that's just kind of the 1 month running average of volume. So it's kind of running through here. And by the way, if you're not watching this on full screen mode in the HD version, go ahead and click that in the player. You'll get a lot higher quality. But at any rate, we did see elevated volume, but it wasn't real heavy for the week. So a little bit of an interesting thing there. However, we did push through this 31.61. That also took us past this 31.71, which was the first lower high that we created back in October. So the September high remains intact. That's still at 31.96. We're now 17 points from there as of Friday's close. So definitely an opportunity here, and this index really could certainly start to play catch up after lagging the others. The S&P 500, this has been a really strong move for this index as well. This is roughly an 8% move since New Year's Eve right here. So that's a big move in a very short period of time. And you can see we've only had a few very minor declines. Now last week, midweek, we were seeing possibly a little bit of short-term fatigue. We had a red bar painted on Monday and on Wednesday and Thursday. No real downside to speak of, but we were kind of getting a little bit stretched and maybe a little bit tired. However, Friday we came snapping right back with a 1% rally to take this index through the short-term resistance and close at 1513. Now if you go all the way out on like a monthly chart, you can see that the all-time high for the S&P is coming into view. That's up here at 1576. That's from Halloween of 2007. So we're kind of now at this point wondering, do we keep rallying higher? Do we see this move really persist until we finally take out those highs? What your guess is as good as mine. And as traders, we don't have to try and predict what the market's going to do. It's all about finding good risk-reward opportunities. That's what I do in my trading, and every night I'm sharing the setups with subscribers here at thestockbandit.com saying, look, I've dug through hundreds of charts. These are the best that I've found, and these are the ones that I'm going to be trading. So if you're looking for some trade ideas to add to your own, you're looking for some swing trading ideas that come with an entry, a stop loss, and target levels all associated with them, check us out. We're currently offering a free trial. Give it a look. So the S&P really acting very strong here, and it's very notable to see the bulls sort of hesitate here earlier in the week and then come on strong and finish with new highs. The Russell 2000 remains a very, very strong index. This is the small cap index, and it's still making new all-time highs. Last week we saw a little bit of a head fake to the breakdown, kind of a bear trap here on Wednesday with this 1% pullback as this index had kind of come up here, kind of stalled out, and really started to sell off on Wednesday. And it looked like maybe it was primed for a test of this 883 or this 868 area. However, on Thursday we lifted a little bit, and then on Friday we went ahead and took out the highs again to close at 911. So this index is really keeping the pressure on. That just shows a very healthy appetite for risk. And then finally is the Dow, which put up its first triple-digit day since the first session of the year, which was right here on January 2nd. So it's been quite a while since we saw a triple-digit day, especially considering that we've only had, 5 down days? I suppose that's 6 right there on Thursday. So very little downside for this index. It's really been a one-way street. And once again, we saw kind of 3 out of 4 days there earlier in the week on the Dow where it was trying to retreat, and yet a big surge of buying again on Friday took us out near highs, and we're now back above 14,000. The all-time high for this index is at 14,198. So we're now 189 points from all-time highs. That's really impressive, and you can bet that Main Street is paying attention to that. They're not as familiar with the S&P 500 levels or the NASDAQ levels or the Russell 2000 levels, but when they come home and they see, wow, the Dow is up 150 on Friday and it's almost at all-time highs, you can bet they're paying attention and they don't want to be missing out. So expect dips to remain somewhat shallow here as bears are getting pounded. They're eager to cover on any minor weakness. Underinvested bulls are feeling very left behind here early in the year. They're wondering, is this the year of the runaway market? And they're going to be putting cash to work on minor dips as well. Stay patient out there. Continue to work the charts. There's lots of good opportunities, and we're finding them here inside the member area. Thanks for joining me for this video. I will have more for you soon, but until then, trade like a bandit.